Hi, I'm Gavin Stacey, a principal in RSM's Business Advisory Division, and I've got with me today Greg Dudley, a partner in our Restructuring and Recovery Division at RSM. And welcome to our first business recovery video series, which we explore all things insolvency, bankruptcy, asset protection, and look at ways in which we can help you take control and support your business through financial hardship. Greg, what is the difference between bankruptcy and insolvency?
Yeah, good question. Two very different things. Insolvency is more of a concept. I think, in my mind, created by media and accountants and lawyers to confuse people, because insolvency is just the definition of it is you're not solvent and you can't pay your debts as and when they fall due. So you could have cash flow insolvency, so you can go in and out of cash flow insolvency, or balance sheet, you don't have enough assets. That's probably not the important thing. It's just an overriding umbrella definition. Bankruptcy is actually a fact.
Yep.
If a person, and it's a personal appointment, if a person's bankrupt, they are bankrupt. They're going to be bankrupt for 3 years, and it has a whole lot of effects.
So you did mention bankruptcy's a personal appointment. I mean, it gets interchanged between companies and whatnot. So can you just clarify that point?
Yeah, very good point again. Because in America they talk about bankruptcy and they chop in the companies as well as persons. Australia, law's different. Bankruptcy is just for individuals and partnerships, whereas corporate entities is a different type of regime.